Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I've put in timestamps, so please use them to skip to the names that interest you. As noted in the video on the 12th of January, Eurodollar remains bullish due to a falling wedge. Price action underwent the completion phase, then the correction phase, which did not break below any trend line, and is now in the resumption phase. The textbook target remains at 1.0666. I cautioned in the video on the 12th of January that Euro Sterling is at risk of a corrective decline, 1 to 3 days worth, but as long as it does not close below the cloud, a bullish outlook is expected to prevail. Now, I was inaccurate about the 1 to 3 days worth of corrective decline, but since Euro Sterling did not close below the cloud and the falling wedge remains valid, I will maintain a bullish outlook targeting 0.8521. The last price action over here has raised suspicion that another bullish pattern is being formed. Let me show you. It has raised suspicion that Euro Sterling may be forming a head and shoulders bottom. This bullish pattern, of course, requires a daily close above the neckline, the upward sloping neckline that is around 0.8468, and once this bullish pattern is completed, the textbook target is at 0.8701. Now, with the latest price action of holding within the cloud, I am still expecting further upside in the Euro Sterling going forward. In the video on the 12th of January, I said that Intel may be forming a double bottom. Intel has since rallied to close above the Ichimoku cloud. This bullish pattern, of course, requires a close above the 26.43 neckline to complete. With currently price action overextending above the upper Bollinger, I expect the next move for Intel to be lower first, just as the correction, before bouncing off support, likely around the cloud support, to resume the upside. Once, or rather if, Intel Corporation completes this bullish pattern, the textbook target is at 34.47. Moving on to new coverage, I'll start off with Euro Swiss because I ceased coverage in the Euro Swiss in the last video and noted that a new pattern may be forming. Now, I believe Euro Swiss is forming the head and shoulders bottom after this week's rally. Now, let's examine this week's price action. We can see that Euro Swiss is still trading above the cloud, bullish territory. We can see that downside has bounced off the 20-day simple moving average twice. And of course, this bullish pattern will be considered complete once there is a close above the neckline at 0.9508. And if this happens, the textbook target of this bullish pattern is at 0.9760. Of course, we have to watch out for the resistance at 0.9581 that can reject Euro Swiss lower when tested. Following the path of Euro Swiss is the Kiwi Swiss, which I also suspect to be forming a head and shoulders bottom, a bullish pattern. Price action of late over here has shown some resilience against the downside. We can see that declines have bounced off the cloud support at least 9 times, and the latest move over here is a close back above the cloud as well as above the 20-day simple moving average. Therefore, I'm biased to the upside on Kiwi Swiss, and I will be bullish once there is a close above the neckline at 0.5178. This bullish pattern has a textbook target at 0.5325. Beware of the resistance at 0.5260 that can reject Kiwi Swiss lower when tested. You can see that I am biased towards weakness in the Swiss franc because the next cross, Swiss yen, in my view is also bearish after completing a symmetrical triangle in a bearish direction. The price action last week attempted a rebound but was soundly rejected by the resistance trend line as well as the Ichimoku cloud. So this symmetrical triangle has a textbook target at 157.4. Do watch out for the supports at 160 as well as 162.19 that can bounce Swiss yen higher when tested. Moving on to equities, the first name that I'm covering is on Medtronic. It has just completed its head and shoulders bottom on the weekly chart. The textbook target is at 115.51. Now on its way up, there is one resistance at the psychological 100 that can reject Medtronic lower when tested. Now also do not forget that chart patterns usually occur in three phases. There is first the completion phase, then there is the corrective phase that counters the trend of the initial completion phase. Then we have the resumption phase. The last name for this video is Pinterest. I think it is forming a cup and handle bottom, a bullish pattern, and last week's rally over here has improved its upside bias after closing above the Ichimoku cloud. But I think the next move for Pinterest is likely to be lower first because currently, and of course last week, price action has overextended above the upper Bollinger. This move lower should be viewed as a correction and is expected to bounce off the cloud support to resume the upside. A weekly close above the neckline at 45.19 will complete this bullish pattern that has a textbook target at 67.01. Moving on to names that I will no longer cover in future videos, the first one is on Hugo Boss. I said that Hugo Boss completed a falling wedge, which is a bullish pattern, and the textbook target is at 47.39. Hugo Boss on the 14th of February met 100% of this target, rising to a high of 47.5 before closing the day lower. I will no longer be covering Hugo Boss in future videos. I will also cease coverage on the S&P 500. Backstory is that the S&P 500 initially completed a head and shoulders top over here on the 10th of January, but there was no follow through. Since then, the S&P 500 has trended higher, being supported by both the Ichimoku cloud as well as the 20-day simple moving average, and I believe the S&P 500's price action has invalidated this bearish pattern via a rally above the last high of 6,147. I will now cease coverage on the S&P 500. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.